DXY, DXY, DXY. What's going on with DXY? 2025 has been nothing but a bloodbath ever since Donald Trump and his little friend from South Africa decided to take over the cabinet. So today we're going to do the usual weekly market breakdown where we take a look at the market from both a technical and a fundamental perspective. And no, I'm not going to go through order flow and retail sentiment. If you want to learn more about that, I've made videos on both of those 1 year, a few of them actually year, and a few of them actually year as well. I'll be selecting two winners for a $2,500 instant funded account giveaway as well. As you guys know, to stand a chance, all you have to do is make sure you like the video, subscribe to the channel, and leave a comment related to the video in the comment section below. On that note, I want to say thank you to our lovely sponsor, that is Equity Edge. Now, Equity Edge is a platform who is very affordable. They've paid out over 6 million in USD over the entire year. They're also one of the few prop firms who's got their own MT5 brokerage license. Now they offer various account types that you can choose from: one step, two step, one step Swift, two step Swift, and they also offer instant funded accounts. The account starts at $2,500 and they go to 5K, 10K, 25K, 50K, even 100K. So if you are looking for a prop firm, I will leave a link in the description box below, guys. Go check out Equity Edge. Now, guys, if you did not know, firstly, thank you to all of the people who has given me some advice. I've been very sick since around Wednesday. Don't know what happened. I was feeling fine the evening, went to go sleep, woke up the next morning. A throat was sore after that. So yeah, I am feeling 80% good, and I'm here to deliver on what I said I was going to do, and that is to deliver the full weekly market breakdown. Now, quickly, as we can see, guys, 2025 DXY has been nothing but bad. It has been a downtrend, and the main question everybody has always been asking, what is the reason for DXY being exactly where it is? Well, one of the things, there's basically three key things that we're going to discuss very quickly before we get into the fundamental and technical data. Number one, policy and unethical policy and political uncertainty. So you guys know headlines and comments about politicians' actions such as proposed tariffs and concerns about independence of Federal Reserve have created uncertainty and weakened investors' confidence in the dollar. Number one. Apart from that, you guys know when Trump came out and he said that Jerome Powell was going to resign, or something was going to happen there with Jerome Powell. That happened somewhere in March or June. And the market also thought, no, if this is what's going to happen, then I'm sorry, then we have no interest in this. Number two, slowing US economic growth. We know that the US growth expectations have been revised downwards, particularly in the first half of the year. Sorry about that. Now, this has also led to markets anticipate potential interest rate cuts by the Federal Reserve, which makes the dollar less attractive to investors. Now, for those of you that don't know, higher interest rates is always good for investors. It's always good for the dollar index, because higher interest, it means that a bigger return for anybody who wants to, not anybody, but for people with money to invest in the dollar index. If you want to learn more about how to read fundamental data, check out this video over here. I've made that before as well. Number three on the list, guys, that we have to talk about is global capital reallocation. Now, there's been a notable shift in global capital flows with foreign investors, especially those guys from Europe, moving away from US assets and now relocating their money to local markets. Now, these are some of the key things that has been driving the dollar index to the floor in 2025, and hopefully things will back up. But the first two things that we do want to talk about, guys, before we get into some technical information, we are going to take a look at some of the news headlines that took place last year, and we're going to take a look at some of the news that did take place, or that's going to take place this week as well. For that, I'm gonna share my screen with you guys so that you can see exactly what it is that I'm seeing over here. Firstly, as you guys can see over here, last week, which was this is for the new week, we had the job openings over here. We had the ADP, non-farm employment change. As you can see, most of these things came through negative, with the ISM services PMI, purchasing managers index, that kind of came through positive. But the most important thing that we do want to look at is the last column over here, where it's the average hourly earnings month over month that came through, as it was the NFP data. Now, the NFP, to explain it to you guys in very layman's terms, that's basically the amount of new jobs that was added in the non-farm role sector. So all jobs that excludes people working on the farm, which is why it's called the non-farm payroll, and the unemployment rate, which is now seen to be increased, or they've been expecting it to increase. Now, this is kind of crazy. Next week, we've got some more important data coming through for the dollar index, the core PPI, producer price index. We've got the PPI month over month. We got the core CPI, which is the consumer spending index, which is an indicator measured, which is an indicator used by the feds to measure inflation. We've got the CPI month over month, CPI year over year, and unemployment claims. We've got the prelim UOM, which is the University of Michigan Consumer Sentiment. This is how consumers overall feels about the market itself. And then we've got prelim University of Michigan inflation expectations. This is how consumers feel about inflation and where they think inflation is going to be, and how the feeling is about the inflation overall. Now we're going to go right over to our chart for our technical analysis. So as you know, if you've never watched me done a breakdown before, I've done hundreds of these videos. Firstly, this should not be taken as financial advice. This is merely just me telling you what it is that I'll be looking at. So we are going to take a look at the DXY, GU, EU, the NASDAQ, the Dow Jones, and gold for this week. And you need to apply the rules of your own strategy if you are looking to trade any of these pairs that I'm about to give to you as well. So like I said, guys, this is purely for educational purpose, and you should apply the rules of your own strategy if you want to get into the market on this, right? So we're going to start over here, and we're going to do the monthly, weekly, and the daily. Anything lower than that, you need to apply that using your own strategy. Firstly, here we can clearly see that the market obviously broken above a very important structural level here. This level over here acted as a level of resistance. Market broke above that. It came back to test it as a support over here for the first time. Now the market printed a clear impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking the Fibonacci from the high to the low of this massive impulse over here. And you can see we've got a 0.382 Fibonacci level that's lining up perfectly with structure. Now, I do anticipate, based on my own, listen to me, based on my own analysis for the market, to at least give us a pullback to the 0.382 before we see any continuations in the market. Now we're going to go down on the weekly time frame, and then if you guys do see anything else, that's fine. I'm not here to say, oh, look at me, I'm right, and look at you. No, I'm just saying this as I've done it before, because I know it's going to be a long shot for a lot of people to say, oh, well, that's fine. Okay, this is what I'll be looking at trading next week. Now, going here on the weekly time frame, what we have over here, we can see here the market broke below this level of support, came back, tested it as resistance, tried to break above this market a couple of times, failed to do it, couldn't do it. Then here we can see also that the market also is currently trading within a range. Now, one could argue that we could potentially have an inverted head and shoulders pattern. Now, an inverted head and shoulders pattern is considered a bullish pattern from a technical perspective, and the way this is done is the market creates a clear impulse correction from you expect a continuation, and because we expect the market to continue to that 0.382 from a monthly perspective, the best way to basically go about this would be to wait for the market to break above structure for it to be in bullish territory. Now, last but not least, the daily time frame that we got over here, as we can see here, the range that I was referring to, a lot clearer over here. Now, if we are looking to go long on this market, I guess the best thing for us to do is to sit on our hands. Now, I would wait for the market to firstly break above this level of resistance over here. Once this level of resistance is broken, it will then become support, and then on the retest I will then start looking for buying opportunities. Now we could basically kind of gauge where the market's going to pull back to by taking the Fibonacci from the low to the high and see where the 0.382 is lining up perfectly with structure. And I would wait for a clear break of structure to that level on the pullback while I start looking for longing opportunities for the market to complete this impulse correction and impulse pattern from a daily perspective, but from the monthly time frame, a pullback to at least the 0.382. That's the one. Now, please do forgive me if I'm all over the place, guys. I've not done a breakdown in the last 2-3 years. I did a market breakdown very long time ago there, 2 years ago. Yay! Any case, cool. So this is what I'll be waiting for the index to break freshly out of that range on the pullback. I'll definitely start looking for buying opportunities. Next up over here, we've got the guy who's busy trading this with a 24 million over here. Now, here on the monthly time frame, what do we have? Now, from a monthly perspective, you can see here, this is a massive impulse. And after an impulse, like I said, you always expect a correction. If you take the Fibonacci from the high to the low, you can see we had one candle pullback to the 0.382. Now, if the market tests and rejects the 0.382, that normally gives us an indication that the momentum is strong, right? Now, according to technical analysis, we always have to look for the Fibonacci that lines up perfectly with structure. In this case, this is the one, although we did get that rejection over here, but we are also trading currently in bullish price because the market had broken below this level of, the market created resistance, broken above that resistance, broke below that resistance, became support, broke above support, came back, tested it as resistance, right? Next up on the weekly time frame, what do we have over here? Now, from a weekly perspective, we can see over here that we are also trading beautifully in a bullish territory over here. We can see what seems to be a inverted head and shoulders pattern as the one we saw on DXY. We also have an impulse, a correction. Then if you take the Fibonacci from the low to the high, we did get a pullback to the 61.8, which is considered the golden ratio. Now, there is there's a very high possibility that I do see this market continue higher. But like I said, based on my DXY sentiment, I do expect a pullback before continuation. However, as traders, we have to be reactive and not predictive and learn to adapt to the ever-changing market environments. Now, the way I will be approaching this from a swing trading perspective, firstly, if I will be looking to go long on this currency pair over here, which is a GU, I would obviously wait for the market to give me a clear break above this level here, because that level is currently acting as a level of resistance. Now, one could argue we have resistance there as well, but again, you don't want to trade that close to a new level of resistance. So I would be waiting for this market to basically break above that level, pull back, and then on this pullback, I would then wait for a entry using the rules of my own strategy, and then basically trade that continuation for the market to go and test this previous level of resistance that it had created over here. Alternatively, if things work out for my own DXY analysis, I would have to wait for the market to print new structure, or if I have to go off the current structure that we have over here, if I will be looking for any selling opportunities, I would probably wait for the market to break below this level over here. On that pullback, I would look for selling opportunities, obviously going on lower time frames over there, right? Next up, we've got Euro USD, and I don't think I need to go with the weekly anymore. Like I said over here, Euro USD has been stuck within this range. As you can see, it's all about price action in the market. As you guys can see over here, excuse me, my throat is still where it is, right? Any case, so here we can see we've got a market stuck within a consolidation phase. Again, there's two ways for us to go about that. We can trade the market till there, or we can trade the market till here, based from a swing trading perspective. Or, there's only two ways for us to go about this. A clear break above that level. On the pullback, we would then look for buying opportunities. Alternatively, you could potentially trade this range down at the start of the market. But if you are looking for a swing, I would just say wait for the market to break out of this consolidation range. Again, guys, this is only if you are going to swing trade. If you are a day trader, like I do, day trade and swing, you can drop onto 1 hour, 15 minutes, and you can apply, whether you are using indicators, because you know whether you are using them or whether you are not using them. Also, sorry, next up we've got the NASDAQ 100 over here. The NASDAQ 100 again, with the NFP data, gave nothing but a consolidation close there, neither up or down. But that's normally what happens when you grab or sweep liquidity. Now I still see some upside momentum for the NASDAQ, as we can see over here. The most recent price action, market printed a W formation, a pullback to the neckline. From here, I do expect the NASDAQ to rally slightly higher, because if you take the Fibonacci over here from the low to the high, we had a pullback to the 0.15, which is a 50% pullback from that impulse that you get over here. For this, I do not personally do not trade the NASDAQ that much. I'll basically wait for a pullback to that level, to this previous level of resistance that got broken, that is now acting as the level of support. And then from there, I'll be looking for buying opportunities in the market there as well. Guys, if I do sound a little bit rusty, okay, like I said, I haven't done this in the last 2 years, so it's all, I'm trying to familiarize myself. I used to wrap this stuff back in the days. You know, now it's very difficult. This price action, you can just read it as you can see it over here. This market's stuck within this range here as well. This market's basically stuck between these two levels over here. And when a market is stuck between these levels, it's good for scalpers to come through and just basically trade this range, because here you can see the market created resistance, broke above that resistance, tested it as support, and the market's been trading sideways ever since. To go long, we have to wait for a break above. To go short, we have to wait for a break below. Where I am now, I'd probably say we'll probably still continue to trade the range, again, because we've got CPI data coming through also, and that's what the markets will be looking at before we could potentially see. Now, gold on the other hand created this big impulse, okay, no pullback. And if we ever see a correction in the market, I guess it will be a very deep pullback. And if that pullback needs to take place, we need a market to trade below this level. But since we are still in bullish price, we can, you know, basically just have to see if we are going to get a pullback or if this market's going to go higher. Because like I said, based on my own rules, we would need a pullback to the 0.382 first. And from where we are, you know, we'd probably, if we go with this red candle over here, I would probably say we are right about getting a pullback on gold. I would probably say that maybe because we have fundamental data that is expected to come through on Wednesday and Thursday, we could potentially see a short correction on gold going into the CPI data, and then from there we could potentially get an expectation of a continuation. Guys, that is the first market breakdown for this week. Let's select 2 winners for the giveaway as well. I'm doing this with my throat that is still hurting me, you know. So yeah, guys, that is it. Let's get over to do the giveaway very quickly. Depot Wallace over here, the guy who turned and guys, this doesn't it doesn't mean I'm done with exposing. The exposing videos will continue from Monday to Friday, and like I said, our focus now will be exposing scammers outside of South Africa and not just scammers with South Africa. Yeah, so we're gonna focus more on external. So if you do have anybody that you want us to expose who has scammed anybody, please just you know, send us an email and we'll be more than happy to expose them. Namibia, Nigeria, Taiwan, Japan, China, America, wherever you live, if you need help, email, we will make the video. So let's see. I hope it was not a Nigerian guy who's going to come out. Leave my brother alone. Okay, but let's see. There's a lot of comments to be loaded here. So let's see. Okay, there we go. Exactly. It has to be Naira. Okay, well, I don't know what that means, but chasing Emil, my friend, you've won yourself $2,500 in a prop funded account, instant prop funded account. The next winner is to buy the hub of you've won yourself $2,500 in a prop funded, instant prop funded account. Guys, to collect your prizes, all you have to do is just drop me an email here. And guys, I will see you in tomorrow's video. Thank you for your time. And as always, cheers for ears.